Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of August 11th, 2014. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you an update. Well, last week, Delaware mortgage rates ended the week near record lows for the year, but the actual mortgage bonds returned lower on Friday after the stock market mounted a late-day rally. Geopolitical news has dominated the headlines last week and sent the markets on a wild ride. If you take a look at the bond chart on the screen, you can see the bond overall has been moving on an upward trend, but you can see a green candle, red candle, green candle, red candle. The market just was all over the place. But the big news is you see that red line there, R2, the level of ceiling of resistance. We broke through that, but we're turned lower at the end of the day and closed right at that level of resistance. So that's going to be a tough ceiling to break through. We haven't been able to break through that every time we hit it before. So with that in mind, the stock market rallying, mortgage bonds turn lower on Friday. We're going to recommend locking in your Delaware mortgage rate to start the week. Take advantage of these record low rates. Lock it in because it looks like short term we could be on the downside of the hill again on mortgage bonds selling off, rates moving up. Now in economic news, weekly initial jobless claims came out on Thursday and they dropped 14,000 claims to 289,000 claims for the week. Jobless claims are at an 8-year low as the labor market improves, and the 4-week average for jobless claims dropped to 293,000 claims. Now, jobless claims is a leading indicator of the labor market, so as the jobless claims come down, that should signal that the jobs report coming in August should come out better than expected, so we'll be on the lookout for that. Now, inflation fears had reared their head this year, and the Feds were worried about that, but reports on inflation recently showed it's still in the Fed's reserve target range. So this gives the Federal Reserve reason to keep the short-term interest rates low throughout 2015. They hinted they may have to raise them earlier, but the Fed's favorite measure of inflation, the PCE, shows that inflation is actually moderated over year basis and still remains below the Fed's target of 2%. And the unemployment rate is still higher than their target rate of 5.5%. So that's good news there. Feds keep the Fed funds rate low. That helps stimulate the economy. In housing news, CoreLogic reported that home price gained from June 2013 to June 2014 was 7.5% year over year, and it was up only 1% from May to June. That's a drop from May 2013 to May 2014. Year over year was 8.3%, so we did drop to 7.5%. So that's showing that the national housing market is cooling off as we have rising inventory and demand is waning on a national level. Now, CoreLogic predicted home prices to rise 5.7% from June 2014 to June 2015, which shows that we are coming off of the hot market of 2013. Now, in a local market, the Delaware market, we've lagged the national market, so we're just now getting our gains, and we do still have low inventory. So on a local level, we should still see prices improve throughout the year into next year. So it's still a great time to buy if you want to get out there and purchase. And in the local news, the next free first-time homebuyer seminar is coming up this Saturday, August 16th in Dover, Delaware at the Dover Holiday Inn. That's from 10 a.m. to noon right there on Route 13. And then the next one in Newark is Saturday, August 23rd, and that's at the Christiana Hilton Hotel in Newark, Delaware from 10 a.m. to noon. You can register for either one of those events by giving us a call in the office at 302-703-0727, or you can register online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.